Hi there, Tanisha Coffey here with Rock Solid Financial. Thanks for joining me today for Health Insurance for Entrepreneurs. We're going to be talking about how to buy strategically and get the most for your money while paying less. So, whether you call yourself an entrepreneur, self employed, freelancer, small business owner, whichever you prefer, this session is for you. Hi, guys. I am Tanisha Coffey. I'm a business strategist. I'm also a licensed insurance broker. I have 15 plus years experience as an entrepreneur, and I am passionate about helping entrepreneurs use strategies to maximize the success of their business. So today we are talking about health insurance and how critical it is for business owners. It's can truly impact you if your health is not in check or if a health crisis hits. So I want to make sure that you guys really understand health insurance. And I want you to think about, just for a moment, literally take a few seconds to think about what happens to your business if you get sick. Think about that. What are the steps that are going to happen? What is the impact of that? So I'll share a little story with you. This is what could happen. So obviously, I am an entrepreneur, and back in March of 2020, I got sick, and I was sick for about 10 days. I was completely laid up in bed. I was sleeping through most of the day, running high fevers. Couldn't keep any food down, couldn't drink anything. So, needless to say, I was not in a condition where I could be working on my business at all, and I certainly wasn't thinking about it. And there was no signs of it. I went to bed the night before. I was perfectly fine. I woke up first thing in the morning. I was okay. A couple hours into the morning, I started not being okay. And that's just kind of how it happened. So it was completely unexpected. Now, this was during the time when the COVID-19 virus was, really starting to hit in the United States. Fortunately, I was not sick with that, but because of everything that was going on, it definitely was a very kind of scary time to be getting sick. In any case, I was sick for about 10 days before I finally ended up going to the ER. And once I got to the ER, the doctors decided that I needed to be transported by ambulance, to be admitted to the hospital. Now, I was only supposed to be there for one night and, have a procedure the next day. And then I would have been on the road to recovery. That didn't happen. I actually ended up in the hospital for 5 days. And it wasn't because of my personal medical needs. It actually had to do with everything that was going on with COVID at that time. So if you're keeping tally, right now, I've already had 15 days that I'm not working on my business. How would your business be doing if you had 15 days of unplanned inability to work on your business? How would that impact you, right? And then once, I did get out of the hospital, I still had to recover. And I know it was at least a week before I, had energy back and was kind of starting to get back into things. But honestly, it was really more than that. So all in all, I spent at least 22 days, 22 plus days is probably more realistic, in healing from that sickness, and that really impacted my business. And I got to tell you, I ended up with $152,000 bill for all of that, and I had insurance. So imagine if you didn't have health insurance, especially as an entrepreneur. That could be very, very impactful on not only your business, but also your personal life. So I say that to say, not having health insurance, not understanding how to use it strategically, not understanding how to, excuse me, buy it strategically could really, really have a negative impact. And so my hope today is to really help to educate you on things that you can do to ensure that if illness hits or if injury hits, that it doesn't completely impact your business to the point where you cannot recover. All right, so we're going to jump into some basics about health insurance. So the first thing you need to know is there's basically two categories of health insurance. There is, private market insurance, and there's government subsidized insurance. So private market insurance is insurance from most of the carriers around the nation, and you can get it through them directly, or you can get it through a marketplace. But the bottom line is the price is the price. There's no option for a subsidy or a discount. Versus government subsidized insurance are things like Medicaid, health insurance through the Affordable Care Act, as well as Medicare. So those are the two categories of health insurance that we currently have when you're talking about a broad kind of approach to it. Now, let's talk a little bit deeper about both options. So, the private market insurance or non ACA, one of the pros is that in some cases it can be cheaper than getting insurance under the Affordable Care Act. But the con of it is that pre existing conditions are not covered. And that includes things like pregnancy. So if you have any sort of pre existing conditions, you can very well and likely will be denied, for coverage. Versus with ACA insurance, the pro is that it does cover pre existing conditions, but then also you have the ability or the potentiality, I should say, to end up paying reduced premiums and copays. So the downside is that with ACA, there are, specific doctors and plans and programs. So if you have a specific doctor that you're working with, you may or may not be able to stay with that doctor. And with ACA plans, even though you can get care for like emergencies and urgent care wherever you are in the nation, if you were to just go to see a doctor, kind of just because, a checkup here and there, and you were outside of your county, it would cost you more. So you want to stay within your county when you just need a regular appointment. Of course, if you have an emergency, you do what you got to do. All right, so let's talk about some myths that are common with ACA. So sometimes people will say ACA is only for low income earners. That is an absolute myth. The fact is that Medicaid is for low income earners. Okay. Another myth is that I make too much money to qualify for ACA. That is a myth for many people, right? So that this one is one of those that falls into the gray area. Here's the fact. While it is possible to make too much money, the threshold for what that number is higher than what most people realize. There are people who are making six figures who still qualify for some sort of subsidy through the ACA. So, don't just rule out ACA health insurance because you think you make too much money. All right. Another myth is that the service providers or medical care that you would get if you're on an ACA plan is going to be substandard to that provided by private market insurance. And that is also a myth. The fact is that many health insurance providers actually offer options for ACA and private market. So the doctors that you have access to is actually identical. The only difference is with ACA, the government is stepping in and saying, we'll pay a portion of the premiums. It actually has nothing to do with the actual care that's provided. All right, so let's talk about ACA and why it's a good thing, especially as an entrepreneur, to look into. So, ACA allows you to potentially save on your insurance, and you can do that in two ways. One way is through a premium tax credit. So that premium tax credit will basically reduce the cost of the health insurance plan premiums. That tax credit comes in a way in the form of a subsidy. So basically what happens is if an insurance premium was going to be $1,000 a month, the government will provide a subsidy, and depending on some factors which we'll talk about in a minute, the government will provide a subsidy to pay a portion of that. Now, that's not money that comes to you. That's money that actually the government pays directly to the insurance carrier on your behalf. So if you were getting a $800 subsidy, then that $1,000 policy, the government would pay 800 of it directly to the insurance carrier, and your premium would only be 200. Now, the other way to save under ACA is through copay reductions, and that's only available on what are called the metal healthcare options. under the ACA plans in the market. And we'll talk about that more in a moment. All right, now eligibility. So, in order to be eligible for ACA, there are three main things that are considered. First is your income, and that is based on your adjusted gross income. So, if you are, say working, for people who are working, then it's based on their adjusted gross income based on their salary. For people who are entrepreneurs like yourselves, it's based on your adjusted gross income, but it's your projected income, right? So, for instance, every year when open enrollment happens, that enrollment is for the upcoming year. And so when you're talking about your adjusted gross income, what you need to be thinking about is what you project you will be making in the next year. That number is what your income number will be when you are applying for eligibility for ACA. Okay? So, household size is another eligibility requirement, and the household size includes the taxpayer, the spouse, and their dependents. It must include everyone, even those that you're not seeking coverage for. And then lastly, your zip code, where you live, impacts your eligibility and the amounts that you may be eligible for subsidies under the ACA. All right, so when it comes to ACA, there are standard enrollment periods. Typically, open enrollment is from November 1st through December 15th of each year. And when you enroll in a health insurance plan during that time, your coverage will begin January 1st. However, many states also extend that period and then they'll add an additional 15 to 30 days. So if you enroll in that second period, that extended period, then your coverage will begin February 1st. All right. Now, with ACA, there are possibilities for special enrollment periods, meaning times when you can enroll in ACA even when it's not that, November, December part of the year. So, in order to be eligible for ACA under a special enrollment period, you have to have a qualifying event happen and you have to be within 60, you have to apply for the insurance within 60 days of that qualifying event. So some of those qualifying events include a change in household. That could be a birth, it could be a death, it could be marriage, it could be divorce. Any of those result in a change in your household. You could have a change in your residence, meaning if you've moved, so and your zip code ended up changing, or the county that you live in changes, um, that would trigger a special enrollment period ability for you. And then also, if you lost your health insurance coverage. So, say that you are a 9 to 5er and you end up resigning, you're part of the great resignation, you resign from your job. Well, when you do that, you lose your health insurance. And so that will trigger, eligibility for an ACA plan. All right, so now let's dig into the strategies, okay? We want to really learn how to make your money work for you. So let's jump into it. All right, so some of the strategies that you can use, for ACA is that you really want to go ahead and check for eligibility, right? So again, I said earlier, some people will think that they make too much money, or they'll say, oh, we're not in open enrollment period, I can't do it. You should always check and see. Worst case scenario is that you don't qualify for a subsidy, and then you'll have to choose from private market insurance if you are, in that part of the year. Okay. So that's worst case scenario, but you should always try for ACA because best case scenario, you get a subsidy and you end up paying less. Worst case scenario, you get private market insurance, which still is good, of course, because you need to protect your health as an entrepreneur. All right, another strategy. When you're looking at the ACA plans, I mentioned it before, you want to choose a metal plan, and here's the reason. The subsidies are only offered on the metal plans. So like the silver plans for the ACA. If you choose a lesser plan, then there won't be any subsidies available, which kind of defeats one of the main purposes of, going for ACA. So keep that in mind. All right. Another strategy is that you want to choose the silver plan when you are looking at your options. And there's a very specific reason. So when you're in the ACA marketplace and you're trying to see if you qualify for a subsidy, you want to choose the silver plans because if you qualify for a subsidy, you not only will get that, but also silver plans open you up to the possibility of a copay reduction. So that's the potential for more savings. The lesser plans, the lesser metal plans, do not have that option. All right. So another strategy that you may want to consider is to opt for a plan that has a high deductible, right? So generally, the higher deductible plans will have lower premiums, and that just means that you will have smaller monthly payment to cover every single month. So that's great. As an entrepreneur, it helps you to keep your costs down. However, doing this strategy is really only ideal for people who are healthy and don't visit the doctors often. It is not right for everyone, especially if you anticipate having a major medical expense or if you see doctors very often. This would not be the strategy that you would want to utilize. However, if you're in pretty good health, don't see doctors very often, then it makes sense to opt for a higher deductible plan and pay a smaller monthly premium so you're spending less money out of pocket on your premiums. All right. Now, a strategy that you want to couple with that, particularly if you are opting for a high deductible plan, is you want to leave space in your budget for adding on things like indemnity plans and riders to your health insurance. And the reason is that when you combine those strategically, you can actually use those indemnity plans and riders to actually cover the higher deductible if you end up in an accident or in an illness. So, for instance, one of those plans may cost, say, an additional $30 a month. But say that you qualified for a subsidy and you're only paying $100 a month for your insurance, but you were planning on, or expecting that you would pay 300 or 400 a month. So you're already saving quite a bit of money. So you're paying your $100 for your insurance premium, but you have a high deductible. Say it's 7,500. Well, you could get one of those indemnity plans or add riders on and have those to actually cover that deductible by paying for that. And those might only cost you, say, $30 a month. So you're paying less money for your overall premium. You add, say, an initial $30, but then if something does happen, you don't have a deductible that you actually have to cover because you have that indemnity plan or those riders in place. Really great strategy to use. All right, another strategy is this one's is specifically for people who have recently separated from their job, excuse me, either willingly or unwillingly. So for those of you, say you're part of the Great Resignation, or if your business has downsized, your company has downsized, that the company you were working for has downsized, and now you're no longer working for them, then you will be given the option if they had health insurance available for you when you were there. You'll be given the option for Cobra. Um, I always say no to Cobra. Yes, there will be, certain situations where it might make sense to stay with Cobra, but in general, it's better to not use Cobra. And it's just because it's just so expensive. As an individual, you'll pay probably 2 times as much as you were paying for the insurance when you were with that company. And then if you have a family and you're adding on, that price is going to skyrocket really, really quickly. So typically when you separate from a job, and say you've resigned, you're going to have 60 days to decide whether or not you want to go ahead and choose Cobra or not. Well, in that time, again, that same time, if you notice 60 days, that matches the special enrollment period for ACA. So in that time, you really should be taking a moment to um, to see what kind of health insurance you could get through the ACA marketplace, since you are now in a special enrollment period because of your recent separation from the job. If it makes sense, go for the ACA plan, or you might choose a private market plan. Either one may be a more cost effective option compared to Cobra. So keep that in mind. Also, for those of you who are married and say that you are, you've become an entrepreneur, a lot of times people will just say they want to go ahead and just be added on to their spouse's plan. Well, typically, an employed's portion of their health insurance is, pretty, kind of reasonable or low. It's manageable because the plan was designed for the company to support that one person. But as soon as you start adding a spouse and your dependents, then your costs start to really kind of snowball and skyrocket. So sometimes it's a better option to see if you can qualify for an ACA plan instead of just deciding to automatically go for the plan that your spouse has, and to look into that for yourself as well as perhaps for your family. If you notice, the name of the game here is you need to look and see because there might be a better option. So don't just do what seems to be the simplest. Take the time to, be strategic about your choices and really check out your options. Now, another strategy is when you do go buy your health insurance, look for the option to lock in a 24-month plan. So in recent years, the subsidies have been higher. So like going into 2022, the subsidies were really higher. They were the highest that they've ever been. A lot of that has to do with COVID, but that means that health insurance is even cheaper than it has been previously. So whenever you have an option to lock in a 24-month plan, whether you do it during open enrollment, whether you do it during a special enrollment period, it's a good idea to look for the 24-month plan because that means you can lock in that lower rate for 2 years. Typically, health insurance is something that you renew or you're up for reapproval every year. So that means that also opens you up to the potentiality of having to, pay a higher premium when you renew. So the 24-month plan can kind of lock in those rates so you can control costs better. All right, now this strategy is specifically for entrepreneurs, business owners who, have employees, have group health insurance set up. So sometimes, especially in the recent years, business owners are having to make tough decisions about how their finances are being spent, and they need to cut costs. So if you currently offer a group health insurance plan for your employees, but if you're finding it's a strain on your business, you can actually collapse the group healthcare coverage and stop offering it. And if you do that, that will create a special enrollment period because you, as well as your employees, won't have health insurance anymore. And that makes you eligible to possibly get health insurance through the ACA marketplace. And then those, of course, who don't qualify for ACA would still be able to get coverage through the private markets. So I know that for a lot of companies, offering health insurance is considered, it's a benefit that people look towards. Sometimes it is a benefit. Sometimes it's not, because sometimes the health insurance coverage that you offer, again, as a business owner, may be great for that one individual, but when it comes to the family, it's not so great. And sometimes with ACA, because depending on how much the health insurance costs for work, if the government deems that is what's called reasonable, then sometimes it makes them ineligible, makes the family ineligible for ACA coverage because they could get it through work, even though it really isn't financially reasonable to the actual family. It's just reasonable by a government formula. So in any case, just understand that is an option for you business owners if that's something that you're looking into stopping to do if you're currently offering healthcare in order to help with your budget. All right. So the last strategy I have is that you should work with a broker, someone like myself. Okay. The difference between a broker, an insurance broker, and an agent is access. And the way it goes is, as a broker, I have access to multiple carriers. So there's not one specific company that I'm loyal to. There's not one set of products that I can only show you. I can shop around for you and kind of let you know which are, which plans have different options and figure out which one really works for you and your budget. The other great thing about working with a broker is that you can leverage your knowledge. You guys are listening today to this presentation, and I'm quite certain most of you are learning at least a few nuggets that are going to help you to make smarter choices when it comes to buying your health insurance. You have that because you're leveraging my knowledge. And the thing about it is that, I'm just dropping, some small nuggets here. Everybody's situation is different. So speaking with a broker, someone like myself can help you, or one of my partners can help you to, do more for your family with your money and be more strategic. And the beauty of it is it doesn't cost you anything to work with a broker. All right, guys, so it is decision time, and I'm giving you 3 options and 3 options only. All right, so your first option is you can connect with me, your health insurance broker, and you can text me, and I will send you a link, and we can have a little conversation, and I can help you get started. Your option 2 is you can do it yourself. Now, with that one, you can still text me, but I want you to text me a different message. In that case, you would text me best DIY health link, and we would go from there. I would send you some information, or you can do nothing else but one of the above. So again, let's go over those options. Option number 1, you can connect with an insurance broker. Ideally, you'll connect with me, or I can connect you with one of my partners. We can get you going. If you'd like to do that, you're going to just simply text me health insurance advice, and you're going to include your full name, email, state, and date of birth in that text message. And then we'll get set up for a meeting. If you want to do it yourself, you're going to text me best DIY health link. You still are going to include your full name, email, state, and date of birth, but I will send you a link back so that you can go ahead and search for yourself. All right, guys. So the number to text is 404-981-8989. I got to go grab me some lunch because I can feel my energy going down. Got to take care of your health as an entrepreneur. All right, guys, that is it for today. I will talk to you later, and I hope to hear from you. Have a great one. Bye.